Welcome back to Investing and Trading Live, sponsored by Trading Academy. Let me start that over.
You better
Let's
start
do that
over.
over again. Yeah. Welcome back to Investing and Trading Live, sponsored by Trading Academy. As always, I am your host, Josh Lilquist, and on the last segment, covered some topics on the trading aspect of the financial markets, and it's all about having entry points, odds, probabilities, and really using supply and demand, which is an economic law in the markets, and then following the rules within that strategy. And Al was dropping some knowledge on how that actually works, the techniques and the concepts of that. And, congratulations to those people that did get set up for this power trading workshop that we do right here at the Academy and locations all across the metro. If you did miss seats for that, simply just text the word investing to the number 210-210 for 2 seats for that power trading workshop. Text investing to the number 210-210. You'll get a text right back instantly, and you can pick a link. There's a link in that text. You can just pick your own date through that landing page as well. If you want to go online, just simply go to investingandtradinglive.com, and you can pick your own seat there as well. There's several dates on the calendar there as well. So, Al, on this next segment here, I've had a lot of people listening to the podcast, Investing and Trading Live, on Apple Podcasts, iHeartRadio, and Spotify, and some different comments about how there's a lot of assumptions about retirement, like what people think is going to happen, and really it's kind of a hope is what it is. And I think we should discuss some of those assumptions that people have or they're making either during retirement or as they are planning for retirement, because I think it's imperative to bring this out to light, because I want to make sure that everybody should have the opportunity to retire at one point. The fact of the matter is a lot of people can't. But what's happening is people are retiring knowing they're not going to have enough, so they're downgrading their lifestyle. So what are some of those assumptions that people are making about retirement?
Well, there's a number of things, and primarily people that are planning on going into retirement that haven't gotten there, they're making some assumptions that may end up with a situation where they can't retire. You mentioned a lot of people, and we know this. I mean, there are a lot of people that come into our classes that say, "I don't think I'm going to be able to retire. I thought I was, but I'm not."
Even
Things
if
just
markets
haven't
that are
worked
on
out.
all-time highs.
Well, even though markets are at all-time highs, that doesn't mean everybody is riding that high. A lot of people either don't have a retirement account, they never set one up, or they've relied on something that just has not been the best asset or the best strategy for them to use. And typically, we talk often about 401ks and how they have really let a lot of people down, even though that was one of the assumptions that people made, is that as long as they have a 401k or 403b or some kind of employer-sponsored plan, they'll just be fine. They don't have to worry about it. But here's some of the assumptions that people make, I think, that are going to cause them to maybe not be able to retire or certainly not live the lifestyle they want. Especially with what we've seen in the market here, Josh, recently, people have the assumption now that people are getting complacent. They have the assumption that the market is just going to keep going up. And you know what? Over time, it will, but we're going to go through periods of time where the market will go the opposite direction, or it will just be flat for a period of time. There was a decade from the year 2000 until almost 2010 when there was no growth, even though we went through some ups and downs, which resulted in that. So if you started out with a portfolio in the year 2000, in the year 2010, you probably were about where you started or maybe a little bit below that. In fact, if you started with $100,000 in the year 2000, by the beginning of 2009, you were down to about $43,000 if you were just following what the S&P 500 did. We've had periods of time where the market was flat for 20 years, from 1963 into 1984. That 20-year period, there was no growth in the market. So you can't necessarily assume the market is always going to go up. And then with inflation, now everybody is assuming, especially with the rate cuts that the Fed has just done, and it looks like they will continue to do, people assume that inflation is going to come down. We're talking about the growth of inflation. The prices that we have been seeing, the high prices in the grocery store, high prices for basically the cost of all of our essentials to live, they're not going to come back down to where they were maybe 3 or 4 or 5 years ago. So inflation is still going to have an impact on people. And then a lot of people assume they're going to work past 65. We just talked about that. Over 40% of people believe that they're going to retire after 65. And the truth is, the stats show, and this is the Employee Benefit Research Institute, shows that 46% of people leave the workforce earlier than planned. And it can be for a number of reasons. It could be medical reasons. It could be that they got laid off. It could be that they've got parents they need to take care of.
So I think what the key is there is sometimes you don't have that choice.
Well, oftentimes you don't have that choice. I would say more often than not, you don't. If you think you're going to be able to work forever, you don't control everything that happens to you or that happens in the economy. So that's kind of taking a risk. It's crossing your fingers, hoping that things work out.
I mean, that's not a good strategy?
Hoping and guessing is not a good strategy, Josh.
Gosh,
and here's the other thing. A lot of people, and we hear, I've talked to a lot of millennials that have been coming in saying, I don't have to worry because I'm getting an inheritance. And 70%, more than 70% of millennials say that they're going to get an inheritance. But in reality, only 40% of their parents plan to leave one. So those numbers don't jive with each other.
I think most of us are going to have a bill.
But yeah, and here's the other thing. Even though people are getting inheritances, there's going to be a huge wealth transfer coming up here. But the problem is most people that receive that new money have no idea on how to manage it properly, how to invest it, or how to trade it. And we know that because the stats show that most people that get an inheritance, they exhaust that inheritance within 2 to 3 years.
You wouldn't believe how many people I actually talk to that come to the academy. They're like, I got this inheritance a few years back and I blew it all.
Yeah. Well, same thing. If the people that win the lottery, you hear about all these people that they just go crazy and they lose everything in a short period of time.
So what are some smart things people can do if they have the capital and they have the money, say, to retire?
Sure.
Doesn't matter where it's from. What are some smart things that they can do? I know we talk about that in the investing classes I'll be giving away seeds to, but what
Sure.
can they do?
Well, number one is know how to protect your assets. And that is money. You've got a responsibility now. If you get an inheritance or even if you just saved up a lot of money over time, now you've got a responsibility of protecting that money. That's something that now you might need to rely on for 20 or 30 or 40 years, not 5 or 10 years like it used to be years ago. So protection is number one, but then also generating income, which is going to have to replace the income that you used to get from your job. So instead of people looking at whatever they have in their savings account or retirement account or whatever they got in inheritance as like a big pile of money that they can just draw from every time they want to travel or buy a new car or pay their bills, that pile starts to dwindle down pretty quickly. And again, if you're living instead of 5 to 8 to 10 years after you retire, maybe you're living 20, 30, 40 years, especially some of the younger people now. Living 40 to 50 years in retirement is not unbelievable. So that money, whatever you have, has to last a longer time period. So instead of just drawing it down, why not learn how to generate income, which is what you should do before you retire, but still you can use those income strategies in retirement. And we talk about these. We go over these assets and these strategies during these classes that Josh is talking about. Mm-hmm. But then why not, instead of watching your retirement savings dwindle, why not grow it?
Yeah.
Generate income, grow those assets, but also with protection. So whatever you've worked hard for or your parents have worked hard for and left you, you make sure that money stays with you or goes on to your kids and their kids.
Yeah, and we're seeing more people, which is great, that want to leave a legacy for their families, kids, usually it's the grandkids.
Sure.
But I think it's important to have, especially in an IRA, is have an income strategy for retirement. So you're not just drawing that down, because eventually we talk about this a lot, and I might say a naughty word on the airways here. It was going to snow pretty soon. That was the naughty word, by the way. And we're going to have a snow pile. And in the spring, it will eventually melt. So think of your monies as a snow pile. If you start taking pieces out of that, shovels, or take a loader and take a bucket out of there, eventually that's gone. So why not have a strategy that is like a snowfall?
Yeah.
And continuing to snow, as maybe you're drying some out of that, but it's not drying down as fast, and then it lasts longer. So that way, say you do have aspirations to leave some for the kids or the grandkids, then it's something for them, and that might help people sleep better at night. And it's really about, like you said earlier too, is how to protect those dollars as well. If you can't protect it, you can't grow it. And that's a big thing that we teach in the investing classes that I want to give away seats to. Now, we have investing classes strictly on retirement accounts, 401ks, IRAs, and how to protect those, but how to create income strategies on top of that. So simply just text the word investing to the number 210 right now for 2 seats for an investing class. There'll be one for you and a friend. Text investing to the number 210. You can also go to investingandtradinglive.com and you can pick your own seat there. So go to investingandtradinglive.com, and there's a little video also as far as more as what you can understand about the concepts of what you're going to see in that investing class. Coming up next, we have a lot more to discuss. We're going to talk more about the markets, what's happening here this week, some of the opportunities that we will see moving forward as well. So stay tuned for that. Follow the podcast on Investing and Trading Live, wherever you listen to podcasts, Apple Podcasts, iHeartRadio, and Spotify. This is Josh and Al, Investing and Trading Live. We will be right back.